Oil in particular getting tagged this morning. It went from almost flat at like 4:30 this morning when I was first looking, to down 1.7 when I wrote that, to down 3% now. And of course, Fernando reviewed the why, or at least part of the why on that. The big why is Chinese demand, don't forget, and the U.S. entering Quad 4 from a demand perspective in September. And that all really started to get priced in when Quad 4 started in the U.S. in July. So this is the second phase of this. And again, I do think that Bitcoin, which is also a commodity, has been front-running this. Commodities, by and large, are front-running the U.S. stock market on Quad 4. And again, I don't care if I'm short soybeans or short the XLK. I'm going to short whatever I damn well please because I don't have to short SPY Monkey. SPY, of course, is still bullish trend, and that's largely because most of the sectors that we like don't go down and make new highs all the time, and utilities are up 12% already for Quad 4 to date, with that happening in oil. So again, there's the OPEC production cuts that people are concerned about, there's global demand, but it's really all just Quad 4. So we got that going on across the board, and yes, I was shorting soybeans on green on Friday. If you missed it, just look at the bongo board. I mean, everything was up. I mean, this is like, again, it was a new, you don't see that on the board, you see XLV, but we're long pink, we're long IAK insurance stocks, we're long XLRE, XLU, XLP. You know, we're long a lot of things. And that's how the pile got to an all-time high. Not by Keith being bearish or being cocky Keith. This is confident Keith in the process, okay? So this is what we did, and we participated in that. Like, my account didn't say it didn't like Friday. I'm not saying I didn't like the month-end markup. I'm just saying it was a blatant month-end markup. That's it. Can you hold both things in your head and be pleased at the same time? You should be. I mean, maybe you're not happy entirely about other people playing the game that way, but I don't really get caught up in that. Again, I want to play against that, okay? So these are defined flows and defined incentives, of course, into month end, but we got paid on that. I mean, we're going to get paid less on that if these things correct today, but the odds of utilities correcting when bond yields go down are pretty low. And that's what the market's been signaling to you, is that utilities, again, if you look in the column that says quarter to date, it's absolutely mercy crushing. REITs and utilities in particular are double-digit gains. Any change on investment grade credit, high yield credit? No, all these things continue to signal buy. Bonds across the board, whether you're looking at the belly of the curve, the long end of the curve, the short end of the curve, the shape of the curve, it's all signaling Quad 4. As a reminder, and you can see last week was a huge week for us on the steepener side because the 10s minus 2s almost got to dead even for the first time. It was within a basis point of that. The reason for that is because the short end of the curve, again, short end of the curve is going down as Wall Street begs for rate cuts in Quad 4. They do not like Quad 4 data. They need the market to go up on bad news. But really what you're seeing here is good news is good and bad news is bad, and we're about to get some really bad news here in September. So pay attention. Again, the way to capitalize on that is it's not through the lens of whining and crying about other players and how they play the game. It's buying gold, it's buying bonds, it's buying utilities, it's buying all the things, obviously, that we've been telling you going back now 2 months. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.